So I've been tasked with looking at can mobile operators make money from messaging 3 years from now? Obviously, it's not just mobile operators, it's everyone in the value chain. And we're not just looking at 3 years, we're going to look at 10 years. So in actual fact, you're getting extra value for money for an additional 7 years. If you don't know Mobilesquared, we're the leaders in business messaging intelligence. We've been covering this space since 2007, and we did, I think, the first ever report looking at conversational X. We called it conversational advertising. This was back in 2010. I think it's safe to say everyone's copied us since then, in our mind anyway. We want to make this interactive. So we've got 5 questions for you. So if you want to participate, please get your phone out, point the camera at the QR code, and then just answer this question. What do you think the business messaging market will be worth by 2034? A, less than $50 billion. B, $50 to $100 billion. C, $100 to $200 billion. D, $200 to $300. And E, over $300 billion. I'll give you a minute. So we've got 5 questions. Through the wonder of technology, we're going to try and give you the answers at the end of the presentation. Okay? So, what does the longer term business messaging look like up to 2034? So this is our 10-year vision. This is what we believe. So the first point is, a lot of you, I'm sure, have been bored centers with me presenting our numbers. But one thing I hope that always comes across is that we're firm believers in the potential and the opportunity around business messaging. So we also believe that as an industry, we're massively, massively underachieving. We think where we are with messaging today is very underrated, and we want to change that. And we're going to try and change that, and we're going to try and drive that with our view. So, I'm going to quote Neil Armstrong, but with a messaging twist. So this probably feels like a big number for messaging, but it's one small number for brands. So we think the market will be worth 200 billion, or can be worth 200 billion by 2034. So that's 10 years. You can do the maths. And you might look at it thinking, well, hang on, this is crazy. We know where the market is today, and how are we going to get there? Well, this is not something that we just kind of plucked the number out of the blue, out of the ether, or anywhere else. This is something that we've been looking at for a number of years now. And these are just from presentations that I think we started doing about 2020, just starting to say where we think the industry should be going, what it's worth. So again, we're saying 200 billion should be the target for 2030, the CPaaS accelerator, etc. So this is something that we've been looking at for a number of years now. And this is partly the reason why. And again, it's been updated, but on the left it shows the annualized messaging ARPU across all messaging. So that is $6.82. That's what it will be worth, I think it's this year. But then you look at the other channels. We've already heard about social media in this morning's session. So the annualized ARPU for mobile social media is $40.60. And then in mobile advertising, it's $70. So brands are already spending a lot of money via smartphones on other platforms to reach an audience. Admittedly, it's all slightly different, I get that. But the potential is the phone is made for voice, it's made for communication, therefore it's made for messaging, and yet we're languishing, that works, at $6.82. So if you kind of think actually where we are with this figure and this 200 billion, in actual fact, if you start to break it down, and to reach 200 billion will create an ARPU, an annualized messaging ARPU, of about $35 to $37 per sub, per unique mobile user. That equates to a user, on average, getting 1,200 messages a year, which again might sound like a lot, but that breaks down to about 3 a day. So if you think about where we are and where we're heading, at the moment, part of the issue that we have with messaging is that, and this came across this morning, I think Christina from Viber mentioned it, and Volva from GMS was talking along similar things. It's the mindset. At the moment, we're talking about the mindset of the consumer, but it's also the mindset of brands. We're very much stuck in this idea that SMS is one way, and that when we then start talking about RCS, it's two-way, it's conversational. But the way that we'll reuse RCS and WhatsApp and all the other rich messaging platforms will be fundamentally different. Because once, again, I think Catherine mentioned it earlier, but when you start to think about where spend with brands will move from, so it could be from social media, it could be from banner ads, it could be from, they maybe reduce their spend in apps and start investing in rich messaging. Because ultimately, all of the experiences that are being provided by these platforms will be brought together in one in rich messaging, whether that's WhatsApp, RCS, Viber, so on and so forth. So where we are at the moment, as you can see, we think that the business messaging, so that's across everything, is worth 36.7 billion this year. And as we see, we think it would be about 200 billion in 10 years' time. But you can see in terms of where we are and the breakout, the SMS, WhatsApp, and RCS. And we're labeling those as the big three because, as you can see, the journey that we're going on, we believe, over this 10-year period, we'll see, obviously, WhatsApp becoming the major channel, RCS not too far behind within 10 years, and SMS, instead of playing the kind of dominant role that it is today, it's playing a kind of a supportive role within 10 years' time. But either way, you can see that those three channels will still account for over 97% of all activity over this 10-year period. Question number 2. On average, what percentage of mobile operator revenues will come from business messaging in 2027? Phones up, if you will. Less than 1%, 1 to 2%, 2 to 3%, 3 to 4%, 4 to 5%, or over 5%. Okay? So, courtesy of our friends at the GSMA, they've given us 2 figures in one of their recent reports. So they said that mobile operator, the market was worth $1.07 trillion in 2022. They expect it to be worth around $1.2 trillion by 2030. All we've done is kind of extrapolated that and then kind of projected with an average growth rate between the two to get these figures in the middle. And then what we've done is overlaid that with our own SMS forecasts, our SMS spend based on what mobile operators will be generating. So in actual fact, over this forecast period, the average that A2P SMS will be contributing to the average mobile operator globally is about 2.25% of total revenue. So again, that's kind of where we are probably in terms of thinking, in terms of maybe the level of importance of messaging. Obviously, everyone in here in this room will see SMS and messaging as very important because it's what we're immersed in, and it pays our bills. But this is where we are. So is this going to change? Question number 3. Does RCS represent the long-term future of messaging revenues for mobile operators? Yes, no, too soon to tell, no idea. They should stick with A2P SMS only. Okay. So where we are for the next 3 years. So, pricing's come up. Alicia from Juniper mentioned it. I think it's mentioned a few other times. Looking at the pricing, certainly on international A2P SMS, it's become quite an issue. It's created quite a turbulent marketplace. So, based on the information that we get through our research, our conversations with industry, this is model 1. So I'm going to show you 2 models. So model 1 on the left, this shows traffic. And this on the right shows the impact of traffic on the spend. So what we're showing here is that it's actual market data, but we've created a phantom mobile operator, which we will call MNOXX. Don't think we can call it X, because obviously Twitter has taken X, so we need to say XX. So what's actually happened here is month 3 of this 12-month period, the operator has increased their international termination rate from 10 cents to 21 cents. Within a couple of weeks, their traffic has dropped by 50%. So this is actual data. This is fairly consistent, we're hearing, across most markets. The aggregator partners then encouraged the operator to drop the price. They actually dropped it to around 15 cents. And what happened within a few weeks, some of the traffic came back. But through that basically 1-month exercise in trying to generate more revenue through a higher price, they've lost a minimum of 20% of their traffic within a month, just for this. And then what's actually happening is then, because what's happening on the international side, the hyperscalers are obviously changing their strategies, they're trying to move away, and also 15 cents a message is still incredibly high, you're seeing a steady decline in traffic over the rest of the remainder of the year. So what does this actually look like in terms of spend? So once they increase the price, what's really happening is that, okay, there's a small uplift of spend. And in fact, that uplift is higher than it probably would have been if they hadn't changed the price for a couple of months. Then what happens is the drop in traffic kicks in. By month 7 here, they're then starting to lose money based on what they would have earned if they hadn't changed the price. So in actual fact, whilst the concept is trying to obviously drive revenues by increasing the price, what they're actually doing, because of the drop in traffic over the year, they're actually starting to lose money. And in this instance, it's 2.6%. So a more dramatic instance here, this is where the operator increased the rate over 20 cents, similar kind of theme, but in actual fact, they kept the rate there at over 20 cents for the remainder of the year. So in actual fact, there's no recovery in traffic. It dropped down to about 50%, and then it continues to drop. So overall for the year, for the 12-month period, their overall traffic was down by about 50%. And as you can see on the right-hand side, how did this impact revenues? Again, you've got a small uplift, an even smaller uplift this time than compared to last time in the first model. But what we're seeing is that, from month 5, revenue's now down, and in actual fact, the actual spend for the year is down 11%. Now, if we then assume that this operator, MNOXX, has certain commitments. So for this instance, we're going to say that it has commitments that it's going to try and generate $12 million a month, an annual revenue of $144 million a month. That's its target. So in actual fact, what it's trying to do, let's say in scenario 1, here, where it's trying to increase but then drops its rate, is it's going to reach its target for 1 month, just over, it'll make about 13 million from the traffic in the first month, then it will start to fall. In scenario 2, you can see that actually it's never going to reach it on a month-by-month basis. So what does this actually mean is that to make that figure up, what we're seeing and what potentially is happening is that it's going to make that shortfall up with fraud. Fraudulent traffic to increase those revenues. So in the case of Model 1, to make those revenues up, the shortfall of revenues, then fraud will account for about 15% of total revenue to make up that shortfall. Scenario 2, it's about 22%. So again, I'm not saying that this is happening everywhere all the time, but this is what we're starting to see in quite a lot of cases. And if you start to think that potentially this could be based on the fact that there's an exclusivity agreement based on this fixed rate that the operator is trying to achieve, knowing where let's say the traffic won't reach that figure. So again, the shortfall is made up potentially by fraudulent traffic. So that's kind of where we're seeing a lot of activity at the moment. So again, you kind of start to think that from the fraud perspective, that's really what's driving things. So this is our updated view. So again, we believe that as a result of the increase in pricing, the drop in traffic, in actual fact, our forecasts are down 2.5 billion based on where we're expecting them to be at the end of 2023. So rather than driving costs, driving spend by brands, in actual fact, the way that hyperscalers have reacted to this kind of market turbulence is they've obviously dropped, or in some markets stopped, their international traffic, and they're looking for alternative means. So it's actually cost the industry 2.5 billion, which if you break it out on a daily basis as an industry, we're losing $6.5 million per day on international messaging. Overall, there's about 113 markets then at the end of 2023 that were actually in decline in terms of traffic and spend, which is again what we were expecting at the end of when we did our forecasts middle of last year. We're expecting 4 markets. So things are changing quite rapidly. Question 4, phones at the ready. What A2P SMS international traffic currently, with A2P SMS traffic currently in decline, what are your expectations for AIT fraud in 2024? Will it increase, stay the same as last year, or decrease? So this is what we've seen based on hyperscalers in terms of their reaction to SMS dynamics. On the left is our original forecast for 2023. In the middle is our revised forecast. You can see in actual fact, based on spend, it's down about 22%. And by 2027, based on all things remaining equal as they are, in terms of the trends that we're seeing based on the hyperscalers' spending patterns that we're seeing at the start of this year as well, then in actual fact, spend will drop by 2027 by 34.4% on our revised projections, or from our original our original forecast by almost 50%. And again, that's in reaction to what's happening in the marketplace. So with AIT, what we're starting to see again, and we're still working on this one, but initially the data that we're seeing and we're being shared is that AIT is coming down, primarily because most of the hyperscalers have massively dropped their spend on AIT. And this is obviously in the international space. So based on what we originally thought AIT would be generating from AIT fraud in 2023, we think that's probably down by about 30 to 35% in the best case scenario. But we're still working on that, so these aren't finalized and these are subject to change. But it just shows that I think things are starting to soften because people, companies, brands themselves are reacting to this very quickly. I think previously what we'd seen with when the prices started to come up from the middle of 2021 onwards is that brands didn't really react. They didn't know how to react. Now we know that brands are reacting almost immediately. I know certain brands, when they see that a price has gone up, they will then switch it off until something happens. So what does this mean for SMS then? And what does it mean from an operator perspective? What does it mean from an aggregator perspective? So we expect traffic to drop over the next 3 years. Not dramatically, but that's what we think will happen. And then based on our model, in terms of what's going to happen with the lost SMS that's moved off from SMS onto other channels, or it's just lost forever. You can see a breakdown here in terms of what we expect without giving you any numbers or percentages. There's going to be a lot of traffic that will move over onto WhatsApp. We put something on LinkedIn that's caused quite a stir a couple of weeks ago that 4% of WhatsApp traffic in 2022 came as a result of SMS traffic migrating over. By the end of 2023, about 23% of WhatsApp traffic on the API was based on SMS and primarily authentication traffic migrating over. But I'll put that into context with you very shortly. But you can see that a lot of traffic's moving to WhatsApp. You're starting to see some traffic moving to RCS. Then on top of that, you've got loss to flash calling. And again, as we heard earlier, the threat from flash calling is not as big as people thought it was. In actual fact, we see it very small, to be honest. But also we're starting to see the rise of mobile identity, different ways of authentication, either through API gateways, etc., from mobile operators. So these are things that are all coming to the fore. Brands are looking for different ways of kind of certainly authenticating things, but from a messaging side of things, there are alternatives that are coming. So last question for you. How can mobile operators protect their messaging revenues for the next 5 years? Increase SMS international rates, decrease SMS international rates, improve enterprise sales strategy to grow customer base, launch RCS business messaging, become a CPaaS provider, and potentially a reseller of WhatsApp, or increase their domestic SMS rates. RCS. This is RCS. I think it's safe to say RCS is starting to take off, but I think the key thing is maybe what's happening in the pie chart on the right-hand side, where of all the traffic that we're seeing for 2024, half of it is coming from Latin America, 45% or 46% almost is coming from Asia. So we've heard about Brazil and India, that's pretty much what's happening. It's the same that we're seeing on WhatsApp as well. So there's a lot of growth, but it's primarily in these two markets. Other markets are starting to see activity, which is really encouraging, but it's a significantly way behind where we are with WhatsApp, for example. So, for example, just to put things into context, on the left here is total A2P SMS traffic in the pink, and on the purple, that's total RBM traffic over the next 3 years or so. you can see it's still a very small percentage, and on the right-hand side, just to put more context for you, we've included WhatsApp API traffic as well. So you can see by 2027, we think that the WhatsApp API traffic will be very similar to where A2P is, and primarily where that's different, because obviously it's conversational. So there's a lot of more engagement, interaction, two-way exchanges between a consumer and a brand on WhatsApp, and that's going to drive a lot of that traffic. So over the 3 years where how mobile operators are going to make money, in actual fact, what we think is RCS will probably just offset any decline that they're going to see in terms of their A2P SMS revenues, which means that in actual fact, over the next 3 years or so, messaging revenues from an operator will remain fairly static. So if we go back to our longer vision, because I think this is actually far more encouraging. So you've got our figure that we just talked about on the left-hand side in terms of where we see the market by 2027. If we leap forward to 2031 to 2034, for example, the world's very different. We now believe that RCS will be flourishing. It will be catching up spend from WhatsApp perspective. And in actual fact, between 2031 and 2034, the CAGR for mobile operators in terms of business messaging, as you can see, will be about 22%. Now, by 2032 onwards, we believe that operators will potentially be generating more money from RBM than they will from SMS. And this just shows the incremental change in brand spend on a year-on-year basis for the three main channels, as we see it. So you can see SMS, little brand increase next year, after which it says it's just going to go into decline for a number of reasons, but also primarily because of the emergence of the rich channels. We expect steady growth in WhatsApp over the next couple of years, and then we think it'll explode into life in about 2027 onwards. RCS is a little behind, but we do believe that there'll be good growth from about 2029 onwards for RBM. So again, overall, the long-term picture we think is very encouraging. And gradually, I think what we're seeing is, what needs to happen is this mindset change that we talked about at the start, in terms of brands seeing messaging as a fundamentally different channel. So what does this mean from an operator perspective? Well, the 2.25% with RCS is potentially going to increase to an average of about 3.5%. So that's quite a big change when we're talking about $1 trillion here. So there's a big boost coming from mobile operators, but again, they've got to be part of it. They've got to make sure that they want to be involved in RBM and the future of rich messaging. So hopefully, bear with me, this will work, and I can give you the results of the polls. Oh, I can't see. Right, here we go. Right, okay, so the polls are in. Just about seen them. Need new glasses. Okay, so 39% of you believe that the market will be worth between $200 and $300 billion. 26% believe it will be 100 to 200 billion. 16% believe it will be worth less than 100 billion. And 19% over 300 billion. For question 2, what percentage of mobile operator revenues will come from business messaging in 2027? 24% of you believe less than 1%. 18% of you said over 5%. So quite a big range there, big delta. And in the middle, I said 18% between 3 and 4%. Don't need that. Does RCS represent the long-term future of messaging? 44% of you said yes. No, 21%. Too soon to tell, 35%. Question 4. What do you expect AIT traffic levels to do this year? 80% of you expect them to increase. 13% of you to decrease. And lastly, how can mobile operators protect their messaging revenues? It's almost as if it's been set up. They can launch RCS business messaging, according to 65% of you. 55% of you, interestingly, said decrease SMS international rates. 45% of you said improve enterprise sales strategy to grow customer base. I think the last thing I'm just going to leave you with is that, again, Catherine mentioned a number, 5%. We've got the number of businesses, or registered businesses, using SMS at about 8.5% to 9% this year. Our forecasts on WhatsApp, or WhatsApp Business API, we think that there'll be about 1% of medium and large businesses using WhatsApp API within a couple of years, 1%. And again, it'll probably be less than that in terms of RCS and RBM. So again, if you think of the actual potential for the marketplace, given that what we see, the kind of the revenues being generated by advertising, by social media or mobile, the potential is there to really grow this and make this a really kind of flourishing, big, multi-billion-dollar industry. So with that, I shall say thank you very much for your time and have a good afternoon.
Time for questions. Anybody, any questions for Nick? That's a first.
Darian?
Too late.
He can.
The boss said. And apologies if I missed it. So the very red image that I've seen in terms of trends in the countries, that was about the international SMS traffic. Are you going to make us feel a bit better and say that there is a lot of growth on domestic? Or?
So we've worked it out to offset, and I should have said this, I forgot, but to offset over the 10-year period, the decline in international traffic on SMS would require a domestic growth of traffic over the whole period of 2.6, of a CAGR of 2.6% to offset that decline. So overall, domestic seems to be fairly stable at the moment. In most markets, it's between about 0.2 to about 4% growth. So not massive, but steady. So, but again, if I guess the worry is that if the increase in the rates of international don't have the desired impact on revenue, then companies could start looking at domestic. And then if all of a sudden a domestic rate goes from whatever, 0.01, 0.03, whatever, upwards to similar kind of levels that we're seeing international, then again, that drop of 50% of traffic will be catastrophic. Because if you think at the moment, international only really accounts for 15% of total traffic. So if you have a drop of 50% on traffic, that's 85% of the market, that's going to have a devastating impact. So.
I have a question.
Tim.
That was almost the announcement of who was speaking then. It's Tim from XConnect. You were pretty damning about the effect of exclusive agreements and exclusivity.
Some. Just saying that's kind of what's happening.
It's just what's happening. Okay, an observation of
Not every
how that could be driving.
Just to be clear.
Driving the fraud piece. I was just wondering if you saw any benefits of people moving towards those kind of exclusive termination agreements that appear to be driving so much of that fraud. Is there anything positive about it?
Well, the positive is if it's a true reflection of where the market is. That's a positive. But if it isn't, and it's trying to drive revenues that aren't there, then that's a negative. So I think that's the simple way.
Well, yeah, okay. I think your last point there kind of does sum it up in that if it's driving revenues that weren't there otherwise,
yeah.
But if it's creating revenues that shouldn't be there in the first place, then it doesn't make any sense.
But I think the key point really is that the high prices aren't having the impact that people with operators and whoever involved that they want, because now that the major companies are reacting so quickly. I think, as I said, I think a couple of years ago they're very slow to respond. And it's almost like, kind of like a fire alarm in an office. When it goes off, you just sit there thinking. Mm-hmm. And then ultimately, when it keeps going and going and going, ultimately you think, oh, I've got to go, and you leave the office.
You've obviously
similar
been
kind
in
of
our
thing.
Office, haven't you?
But at some point, yeah.
Yes. Okay, thanks very much.
Any other questions?
Okay.
Thank you very much, Nick.
Pleasure. Thanks.
Right. Thank you.